We are back. HIMS and HERS, quarter two earnings just released. The stock has fallen a little bit in the past week, but year to date, HIMS and HERS is still up over 120%. So what's going on? We got some pretty good numbers coming out of quarter two earnings. Although most of the headlines we are seeing are focusing on that revenue miss, HIMS and HERS stock falls 12% on revenue miss. HIMS shares drop after quarterly sales miss Wall Street estimates. But in reality, guys, when you take a look at the numbers, they only miss revenue by 1%. We got some numbers right here. Year over year, on the right, we're going to have our latest quarter 2 2025 earnings posting $544 million in total revenue. That is still up 72%. That is still up 72.6% year over year. Yes, they missed by 1%. Big deal. We're still up. They posted $315 million in quarter 2 2024. We are still up 72.6% on total revenue top line. And earnings per share, 216% year over year, 19 cents in quarter 2 of 2025 versus 6 cents in quarter 2 2024. That is up 216%. Don't focus on the headlines. This company is still growing like crazy. They are just trying to scare you out. As we scroll down into the free cash flow and the cash flow from operations, this is what we'll focus on this video today. This is the first quarter that they have posted negative free cash flow. Today we'll go over the top 3 reasons why that is happening and how in the long run it's going to benefit them even better. Cash flow from operations, they posted negative 19.1 million versus positive 53.6 million. That is down 135% year over year. And for free cash flow per share, posting negative 31 cents versus positive 22 cents, down over 240% year over year. What is going on? What just happened? Why are they posting negative free cash flow even though they posted crazy revenue gains and also an improvement in their net income? So I'll go all the way down to net income down here, posting 42.5 million versus 13.3. Their net income is up 219% year over year. So everything's improving, net income, total revenue, earnings per share. But what happened with their free cash flow? Why is it negative? So number one of the biggest reasons why they're posting negative free cash flow, significant changes in their working capital. And that is going to be about inventory buildup. As you can see for the June 2025 quarter, inventory has gone up to 141.8 million. That is pretty much double the inventory that was in quarter 1 of 2025. And when you go to June of 2024, they had 40 million in inventory, 3 to 4 times the amount of inventory they currently have. This is the top reason why they're posting negative free cash flow. This is the primary driver. Large increases in inventory buildup in quarter 2. What is HIMS and HERS doing? What are they ramping up for? When we go straight to the transcript, meaningful investment was made in the second quarter to expand our ability to offer new form factors, automate processes within our facilities, and strengthen supply chain through significant investment in working capital. They want to move from a world of hundreds of treatment options to thousands over time. Check out these charts. They have a huge lineup of products coming out in 2025 alone: menopause and testosterone, the launch of new specialties, and the introduction of personalized products and services will allow them to scale. For full year 2025, they are expecting $2.3 to $2.4 billion in revenue. This significant amount of inventory change consumed a huge amount of cash, causing the operating cash flow to turn negative. Management did say inventory buildup was intentional, and this is going to be a one-time thing to build durable supply. They do specify how they expect to return to positive free cash flow generation in the second half of the year. And this is something not expected to recur every quarter, again, to strengthen their supply chain across key product categories, and that similar inventory step-ups won't be needed every quarter. All right, on to number 2. We intend to invest in capabilities that will enable us to gain deeper insights to better serve our subscribers while simultaneously increasing investment in our platform. So in quarter 2 2025, HIMS and HERS dramatically ramped up capital expenditures. Capital expenditures directly reduces cash flow from operations. And as you can see right here, capital expenditures were 46.1 million versus 3.2 million in quarter 2 of 2024. That is over a 10x increase. Most of these capital expenditures are going to be going into property, plant, and equipment, which is up to 277 million, intangibles, software development, website cleanup, pharmacy automation systems, fulfillment infrastructure, all to support the company's rapid growth. So check this out. Capital investments in 2025 will focus on unlocking higher quality and more personalized care for millions of individuals. So they bought a bunch of facilities. They're increasing automation. They bought some peptide facilities. It's like future products will be offering some peptides. Acceleration of new specialties, positions to launch new, more complex specialties, hormonal therapies, low testosterone and menopausal support, new form factors, and more multi-condition treatments. The company is scaling up internal fulfillment. So inventory buildup is one. The huge increase in capital expenditures was the second major factor, turning free cash flow negative this quarter. But it's all just a sacrifice in the short term. They are intentionally reinvesting their money into their growth capacity. Again, management has emphasized that they do expect to return to positive free cash flow generation in the second half of the year. And lastly, guys, number 3, international expansion. With the new recent acquisition of Zava, they are expanding into Europe, provides a foundation to build upon and deliver value to millions of potential future customers across the globe. So Zava is going to be focusing on Germany, France, and Ireland in the second half of the year. Zava will also play a foundational role in supporting our Canadian expansion. They are also planning to expand into Latin America and the Asian markets. We expect our capital investment will bias toward unlocking new capabilities to drive subscriber value in the coming years. This is a long-term hold, guys. In the next couple years, this company could be huge. They're going to disrupt the healthcare sector. One of the last sectors that haven't been disrupted by technology, and I feel like HIMS and HERS has the best shot at doing it. In summary, remember, Q2 2025, cash flows turn negative. This is just a temporary decline for future growth. The underlying business does remain strong, and HIMS and HERS does expect cash flow to return to positive in the second half of this year. This company is just beginning at a $12.4 billion valuation. If you're thinking about investing in HIMS and HERS, you're investing in the future of healthcare. And so we'll end it like that. Thanks for watching this updated video. We'll keep following this stock. Let me know what you guys think in the comments below, and we will see you on the next one.